journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to look at the gold market here over the past 3 weeks. As you can see here, we have an ABCD pattern that measures to 46.43. This was the first high. This one came in here at 46.47. And then we had another high today that came in at 46.50. That's drive 1, drive 2, drive 3, just like this one was. Drive 1, drive 2, drive 3. Now what we should do, the last time that took a high, we're going to measure how many days it took. So we're going to measure the time frame right here, okay, to see if it's about correct. That's the time frame, and you move it over here. So it's about the time frame that we'll be expecting to have a top come in at this level. That's item 1. So we're not sure that it's the bottom yet, or the top, but we have to get below here. Then you'll be sure that that's the bottom. Just like when you went below there, it told you that was a spot. So once you have to get below this one, and then you'll know for sure if that is going to be the top. Silver, it's in a totally different category. We'll cover that in just a little bit, but we need to look at the copper market, folks, because copper has got a very, very interesting pattern here. Oh, boy. Oh, man, you got to love this stuff. Look at this, folks. We've got an absolute, let me get this out of the way here so you can see it. There's a beautiful 3 drive to a top pattern here in the copper. I believe this is a repeat date. So this is the same one. It measures here to 161.18, and that's what we hit. So there's drive 1. There's drive 2, there's drive 3 over the past week. You can see as you put this up together, we'll blow it up, you can see it much clearer, and that's what you look at. The high was 161.17. This probably could move it down anywhere to make it fit, but that's what you're looking at. Now we should check the cycle high from high to high to see if there's any symmetry in here. And there's 2 days in here, so it's off by a day, which is not unusual, but you do have the ABCD. You have the potential for a 3 drive to a top, and as you can see, you've dropped about 10 cents from the high, which is one sign that that's possibly working. Now, what we're going to do now is you got to love this stock market, folks. Hold on just a second. I'm just saying, because every time you get down near a place where you think there's going to be a bottom, look out. The Russell is holding up extremely well considering everything else, folks. You can see there's the Russell still up on the day, whereas all the others are still down. We're having a little bit of a rally here in the NASDAQ. But we'll cover that in just a minute. It's not important that we watch that one as much as we do what we're watching here with the silver and the gold, and we're going to be also looking at platinum. Now, here's the silver market, all right? We'll get up here and you can see this thing hit, believe it or not. We've been following the 382s all the way up here today. If you remember, there was the one last night, okay, that we talked about. That came in today, right there. There was the one before that. There's this one right here. Now, we haven't taken that out yet. We came very close to it, but we did not. So that's still acting pretty bullish. We hit 92.10 in this, 92.20, excuse me, 92.20 was the high in the silver so far today. Folks, that's $8 away from $100 silver. Who would have thunk it? Boy, that is one heck of a move. Now, the second thing we got going backward, this is just the last couple of days now. You can see you had a big ABC. Oh, shut the front door. It's got the wrong one in here. There it is right there, from there to there. Put it in right there. You came up and it comes within 75 cents of the exact high. So that may or may not be it. Now we've had the break and we've had a much greater retracement than 382, as you can see already. So that's still positive in the silver. Copper and gold look different. They're not nearly as strong. So that's what we're trying to look at as we're unfolding this thing here so far this morning. So hold on one second, and we'll get this out of the way. And I wanted to show you the platinum. So hold on one second. Platinum up here one day. In fact, I talked to a platinum producer today, and he said business is booming. Well, no kidding. Okay, here's platinum. Now you can notice here, it has not made new highs over the last 3 days. It's actually it's lagging quite a bit. We've made new highs in silver. We made new highs in gold. We have not made new highs in platinum. So that is the weaker of the ones. So that's, if you want, I don't trade platinum, but they're supposed to sell the weakest, but do the one that you'll like the best. That's the way I look at it. So get that out of the way, and we'll get that out of the way, get this out of the way. Now we got to talk about a few other things here. Move this out of the way right there. I want to show you crude oil, folks. You remember how they're telling us about there's a big supply of crude oil and everything's going. We talked about this so much, but look at this, folks. I just want to show it to you because it's really amazing. Look at the yesterday. Look at the day's low. You see that one here? Look at this one right here. Look at these 382s, folks. They're absolutely unimaginable. And look again here, blowing it up for today's action. Look what we've done today. I mean, it's just amazing on these strong trending markets. It's just you got to pay attention to it because it's a really, it doesn't work all the time, but nothing else does either. So you got to be careful. All right, let's get back up here, and we've covered. Let's see, we got that covered. We got that covered. We got the YM covered. We have not covered the YM. We're going to do that right now. And that has been all over the map. I mean, okay, there was, you can see there was a high yesterday. We had the 382 here. We had the big break. There was another 382 right here, I believe, this morning from the previous high that we made right there. If you drew that in, you'd see you went right to a little above the 382 right here. Then we've had several ABCDs on the downside. We had A, blow this up so you'll be able to see it. This is really wild action, folks. You're talking 94, 350 handles up, 350 handles down, bang, 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 bang. We had A, B, C, D, A, B, C, D, and now we're in the midst of a little bit of a rally. Now we have a new low and everything, so we have to check to see what the 382 is going to be on the way back, and it's coming up right about now, so pay attention to it because if it's any good, it's not going to get any higher than 41.88. That's a little bit higher, and then we're going to see if that's going to, be in the ballpark of where we want to be watching here so far this morning. Okay, so keep an eye on that. That's going to be an interesting one. Now, like I mentioned, there's only one of the indexes up, and that's the Russell. But remember, that's 2,000 stocks, and they're different than the others. So it's amazing that you can take a look at them that way. All right, we've covered the crude oil. Now we're going to cover the Treasury bonds. We had several questions about the Treasury bonds. Our guest will be Mr. Stan Harley today, God willing, and she usually is, so we'll see what we've got going here today. Hold on one second. Get the bonds up here. Wow, why can't I find the bonds? This is not good. Whoa.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, here's the Treasury bonds. You can see we're getting ready to reach a high up in here over the last few days. We had a nice bottom right in here. We've had rising bottoms in here telling you that the market is ready to start going higher. And there's your target is going to be right up here. Looking at this, going back, you see here, and just look at it from a longer term standpoint, we're going to be pretty close to a 382 retracement here very shortly, folks. So I think we're there already. There's our high right here, and there's our low right there, and we are at the 50% level as we speak, right in here. So if it's going to have any type of a resistance, this would be the time that's coming in, just pretty much right where we hit it. There's your ABCDs, there's your 50%, there was your 382. After the 382, all you got was a half a point, and now you're back up to this level. If we look at the Treasury notes, which of course is the bigger of the two as far as the open interest at 6 times that open interest, you'll see it's probably, there it is. Here, let's do the hourly just like we did so we can compare bananas and bananas instead of bananas and oranges. There we are with the Treasury notes. You can also see we've had higher bottoms in here coming up, and now we're almost at the 61% retracement here, looks like on the Treasury notes. Let's get that back up here over there. Yep, there's where we're coming. We're getting really close to that. Well, that's just a heartbeat away here at 1219. So this is very interesting because you've got one that's completed, another one's almost. So we can get above here. There's could be a little bit of a action to the upside, I would think, but it's going to take a little bit more than that right now because we're right at an area where we really should start to roll over. Now let's talk about a trade that didn't work yesterday, and most of you will know what that is, and that is the old Japanese yen. Hold on one second here. We'll get up here. We were looking at that. And you'll see here, we'll get out of the way here. We got stopped out with a very small loss, but then the reverse happened. There it is right here. Remember, we were looking to do this, folks, at 159.06. That was right in here. We had our stop right there, 159.26. So we got stopped out, and then the market had the big break to the downside. I didn't want to risk more than a couple $100 on that, so that's why I was getting out of it. And this was the real key right here, folks, because this was a 382 off of the yen. You'll watch this from your high to your low. Up, it's the lower, the higher low. Just 1 second here, because this was the right here. You can see we're right to the 382. And once we broke below that, told you that we're in the downtrend. You had one little chance to rally up in here, but watch it closely, because this is a really big number up here, folks. And just had, I don't want to risk more than a few $100. That's why, that's just my style. Anyway, so what we want to watch for is a little 382 retracement here in this dollar yen, because this has a chance for real legs, folks, because there's nobody in the world thinks that this thing can turn from up in here, and we think that's the case. So we've got to watch it real close. This is a down day today, so watch it very closely. Go down to your smaller time frames. Now you can see here we had a pretty big break here. Didn't do much here. Then we had a pretty good rally here. You notice this rally came up in right here, so you have to measure that from your high down to your low. There was your 382, came in right there. So if you got in at that time, that looks pretty good. So you're making another 382 pretty soon. So keep an eye on it. It's one that has, oh my goodness, has a potential for some pretty good movement to the downside. Let's take a look here now at the British pound. Got several requests about that, and I'll take just a second and we'll bring it up here. The euro still looks bearish to us, folks. It just had a little bit of a bounce, but nothing to speak of. Same thing here in the British pound, still heading lower. All we had today, you can see there was the action yesterday. There's today's action, still heading down. Nothing really dramatic with that. And we'll take a nice look here at the euro. And then what we're going to do is we're going to have Stan up in a few more minutes, and we'll see what he has to say, because he's certainly been really spot on with these markets, and we want to hear what he's talking about. Okay, so here's our euro, and as you can see here, still moving to the downside. That's all we're doing now. This is an hourly chart. Still look, this is still going down. We talked about the 382 yesterday. That was yesterday's 382 off of the high. Right there. There it was right there. We went right to it. Now we're breaking down. You can see we're still moving down. We have lower highs. See those lower highs in here like that? That means you're going down. If you look at this, just on a 382 retracement for today, there was your 382 right there. Stayed there for 1, 2, 3, 4, 5 hours, and then it finally started to fade. So the euro still looks pretty good. That means that the U.S. dollar still looks good. Not like they're telling us on Bloomberg and also on CNBC. They're saying that is not the case. All right? Okay, now I wanted to make sure. This is one I have to show you, folks. This is a MicroStrategy. Someone asked me a question about it. I know nothing about it other than it's Michael Saylor's company. He owns more Bitcoin than anybody except BlackRock. So here is MicroStrategies. Now, wait a minute. That is not what I was looking at before. Oh, it's a 60-minute chart. No wonder, Larry. Hold on just a second. Let's take a quick look at this on the daily, and you tell me that this is a bullish strategy with Bitcoin. Golly, folks, look at this. If anything, you're at a major bottom here, possibly. You've got an ABCD pattern. There's your 382. It was a nice sale, but you had to, let's just draw it in. Come on, ABCD usually works. So there's AB right here. There's CD right there. And there was a low at 50, and now you're at 78. So nothing wrong with that. What I don't understand is, well, you know what? Like Abraham Lincoln said, it's better than to keep your mouth shut and be thought a fool than to open your mouth and remove all doubt. So I'm not going to have any doubt on this one. I'm just going to say that's what the chart looks like, and we'll go from there. We'll get that out of the way right here. The euro moving down, and next thing we're going to have to take a look at is the hold on. I wanted to share with you one other thing about the crude oil. Let me get this up here to show you why it's so very important. those were the big moves. Now we had a nice pullback here this morning. That was the earlier one, okay, for early in the morning. That was that one, and then this one is a secondary one. This one's a little bit more, but we had an ABCD in here, so that made that. There's your 382 on that first one right here. You're going to see it right there. There's your 382. Then what you do is you came down and made the 50%, and then you made the ABCD up like this. So this is still acting relatively bullish, folks. It had one little pullback right here, and that was nothing more than an ABCD pullback right here. So this is still acting bullish on the crude oil. If we look at this on a 4-hour chart, it looks like it's going to be headed up. Well, we're already above the 1.618. Look at your 382s on the way up. Look at that. That's what we were looking. Remember that one with the Russell, the one we talked about yesterday? Let's show you, folks, just to remember what happens, because what goes up, see that? Crude oil's doing exactly the same thing that Russell did, all right? All right, we're going to take a break. We'll be right back with Stan Harley of the Harley Stock Market Letter.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back with Stan Harley of the Harley Stock Market Letter. Stan, welcome to our show today. What do you got for us, buddy?
Well, good to see the good-looking man himself behind the voice. Wow.
Yeah. I did my singing last night at the nightclub, so I'm a little hoarse. I had so many on, what do they call those things where you got to come up and sing more than once? Anyway, wake up, Larry. Let the folks hear what Stan has to say. Go ahead, Stan. Please tell us what you're looking at.
Absolutely. I thought we'd start with just taking a look at the big picture. It's something that I've talked about before, but I thought it merits a little bit of repetition. What we have on the screen is a weekly chart of the S&P 500 going back to 2016, going back about 10 years. And what I've done here with purple vertical lines is I have marked all of the major lows on the charts. And these lows mark what I call the weekly primary cycles. And it's a variable cycle, but nevertheless, we can glean a lot of really good tactical information from this. When I put all of these dates into a spreadsheet, like I've done here, I can compute a number of things, but the measure of central tendency that I am most interested in is the median. And as you can see, I've marked all of the lows, the time periods, and the intervals in weeks, 48, 21, 37, and so forth. But the median of all of these falls right at about 32 and a half weeks. That's about 7.7 months. That doesn't mean we're going to get a low every 32 and a half weeks like clockwork, but that means that's the median. So at the broad brush, about just under 8 months, plus or minus, we should see a significant low on the weekly chart. And the last occurrence of this pattern marked the low that we saw back on November 21st. And the next one is due, based on my analysis, based on just analyzing the median, right at the tail end of July 31st of 2026. Now, the other takeaway from this chart is this phenomenon that I refer to as right and left translation. In a bull market environment, which we are in, as prices move upward, you'll note that the crest, or the high point in price, occurs to the right of the midpoint of the cycle. In every case, on the way up. And then on the way down, we get the opposite. We get left translation. But you'll see here, on the way up, right translation, right translation, right translation, right translation. So with right translation, we typically get highs around 6 to 7 months off the prior bottom. So what does that mean? If you take November 21st and you add 6.5, 7 months, that says May, June 2026, and here we are, January. So my gosh, we've got 4, maybe even 5 months of bull market ahead. So let's just enjoy the ride, shall we? Now, having said that, market does not go straight up. And what's going on right now, I believe investors are undergoing a little bit of jitters, shall we say, as the Dow Industrials start their fast approach to the 50,000 mile marker in the sky. We're just a little bit below that right now, and the S&P just a smidgy-widgy below 7,000. So you've got two significant numbers in the sky, major milestones for the Dow, 50,000, for the S&P, 7,000, and we're just a smidgy-widgy below both of those levels. So as the market tries to get a little bit closer, well, some sellers come in and hit the sell button, and that's what's going on right now. Okay. Now looking at the trade, I'm sorry, go ahead, please.
No, I said doing really good so far, so keep it up.
Okay, looking at the daily chart we have here on the screen, these primary cycles, weekly primary cycles, which span about 32, 33 weeks, just under 8 months. I've shown the two most recent occurrences of that. The first here on the screen, April the 7th, and the second one, of course, on November 21st. That spanned 159 days. Each primary cycle is typically composed of 4 trading cycles. And indeed, that's exactly what we had in the last one. I mean, textbook, 1, 2, 3, and 4. And if you take 159 trading days and you divide by 4, you get 40. And that is the typical trading cycle in the stock market. It's about 40 trading days, about every 2 months. Now, having said that, we don't get cycle lows every 40 trading days. That cycle expands and contracts. And what it's been doing this last year, we've seen essentially 2 trading cycles, one 49 trading days, and the other about 30 trading days. You add those together, you get 80, divided by 2, 40. So what's going on right now? Well, we appear to be in another 49 trading day cycle. Very often these trading cycles of 49 days are typically spliced into what I call 3 smaller subcycles. And they're variable. They're variable based on Fibonacci relationships. So the smaller ones I refer to as A, B, and C, Alpha, Bravo, and Charlie. And we are now in the Charlie component. And I believe we got a little pullback going on today, of course. A little bit of jitters about Dow 50,000, S&P 7,000. I think that will probably be over tomorrow. Today on the close, perhaps, and I'll show you why here in just a moment. But this 49 trading day cycle that we're in right now, I'm looking for that to top out right near the end of this month, somewhere around the 28th to the 29th of January. And then we'll begin a short but perhaps sharp decline into the first week in February. And that should bottom out somewhere around 49 trading days, plus or minus 2 or 3 days left or right of that date, of around February the 3rd, plus or minus. Very, very textbook, normal, garden variety cyclical pattern that I've seen recur over and over. Secular bull market. Now, in the very, very short term, Larry, what I've seen is this, and that is the stock market on the 2-hour chart is exhibiting a pattern of trend change cycles of about every 35 bars. Every 35 bars on the 2-hour chart, plus or minus 1, 2, maybe 3, we tend to get an important trend change. Most of them have been lows. 35 bars is about 9 trading days. Got 36, there's 4 2-hour bars in each trading day. 4 times 9 is 36. And this is based on my regression analysis. It's coming in right around 35. So approximately every 9 trading days. Oh, there's the music. We'll pick it up after the break.
We've got to pay a few bills. We'll be right back with Stan Harley, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back with Stan Harley, the Harley Stock Market Letter. Please continue, Stan.
Thank you, Mr. Larry. I wanted to spend a couple of minutes on this chart. What I found here is on the 2-hour chart, and there are 4 2-hour periods in each trading day. And I realize the stock market's only 6.5 hours, but nevertheless, the analysis works out anyway. And most software packages can derive the 2-hour time period on the stock market. But what I have found is we tend to make cycle lows about every 35 bars, plus or minus a couple. Look how regular this cycle has been. The genesis point was the high that occurred back on October the 29th of last year. And then going forward in time, look how regular this has been. We marked a high here, but every other cycle has marked a low, plus or minus a couple of bars. 35 bars on the 2-hour chart equates to about 9 trading days. So what's that? Just under 2 weeks. About every 2 weeks, we get a significant trend change, as denoted by this cycle. It is next due to recur, ideally, tomorrow, right at the open, 10 a.m. Standard deviation on this is 1.5 bars. So I would be looking for tomorrow's open plus or minus about 2 or 3 bars. So it could occur towards the close today, or it could occur shortly after the open tomorrow. But I think you're getting set up for a tremendous buying opportunity being handed to you on a silver platter here from the long side, unless I'm wrong.
That's okay. You're doing pretty good so far, pal.
But seriously, Larry, this is so far has been a very, very regular cycle, as you can see.
Yeah.
And should the pattern continue, well, let's extend it forward in time another 35 bars, which I've done in my spreadsheet, and it aligns with January 28th, about noontime here on the East Coast, 12 noon. Given that my other analysis indicates the potential for a high in that time period, I suspect this 2-hour chart is probably going to go and coincide with that high I'm expecting on the daily chart. Now, depending on exactly where this 2-hour low occurs, late today, early tomorrow, I'm going to have to put that data point into the spreadsheet, and that might move that January 28th, 12 p.m. time a little bit left or right, but that's going to be probably pretty doggone close. So going to be watching the action going into the close today and at the open tomorrow. And if we get the trigger for a reversal here, well, that might be one investors from the long side might want to take a good close look at.
Well, we've got enough political and geophysical things going out there, so anything could happen for sure. Please continue.
Anything
Stan.
could happen. Yeah, I'm a market technician. It's interesting. These fundamental events, for some strange reason, tend to coincide with what the technicals suggest, particularly with market cycles. On the other hand, I know from experience, the cycle gods up in the sky, they've got these levers they're pushing and pulling. And when somebody like Stan Harley goes on the air and talks about these cycles, they're going to make sure Stan gets it wrong and looks foolish, and they pull that lever. I don't know if that ever happens to you, but it often happens to me when I go on the air and show this stuff.
Happened once in 1938 that I can remember.
We shall see. Hey, here's something that hardly... Yeah, I'm sorry. Go ahead.
No, I said it's very funny because I'm thinking the same thing, Stan. Every time I open my mouth, I'm afraid, oh my God, what's going to come out this time? So please continue, my friend.
Those cycle gods are up there, and I mean, they got their hands on the levers. And as soon as you and I go on the air and start talking about this stuff, they're going to pull those levers and make sure it doesn't happen. And that's just a given.
Stan, wait a minute. You've been bullish for a long time. Just because we're having a down day, for God's sake, give yourself a little bit of a break. I mean, you've been bullish when everybody else was bearish. Raise your hand, Larry. But I mean, my goodness, what a great call you had here. So I'm listening to what you have to say, pal. So please continue.
Thank you. Here's one of the big five components that I follow. For me, the big five indices are the Dow Industrials, the S&P 500, the Dow Jones Transports, the NASDAQ, and the New York Composite. And I follow those five in the interplay among them, look for confirmation or divergences. Here's one that just has not gotten much airplay at all, the Dow Jones Transports. Oh my gosh. They just hit an all-time high yesterday.
Yep.
Yesterday. Look at that. So you got all this thing banging on all 8 cylinders, as we used to say. It's still a secular bull market. Doesn't mean we aren't going to have a little bumps in the road along the way, a little bit of texture, like what we're seeing today. But I think the path of least resistance is northbound.
For sure. Stan, we have a question. Do you, by any chance, do any work with gold and silver?
I do. It's funny you asked that question. That just happens to be my next chart.
Oh, well, lucky guess.
Hey, I'll come
I'm
ahead.
going to head for the track this afternoon, but unfortunately it's 400 miles away. Go ahead, my friend.
Let's take a look at the metals. Boy, you need binoculars and you need to look straight up and don't hurt your neck looking up, because that's what's going on here. I've never seen in a vertical ascent like this, particularly in silver. Oh my gosh. I mean, we had a heck of a rise in 1980, but I think this eclipses even that.
It doubles.
Metals have gone straight up.
It's doubled 1980.
Oh, geez. Straight up indeed. But here's something that I have found through just digging through a lot of research. You know, I'm a Lucas kind of a guy. And one number that shows up a lot in the markets is the Lucas number 47. For example, there's a 47-month cycle defining the pattern in Bitcoin. And I've shown that on the air here with you and the viewers. Well, take note of this. I found that there is a Lucas 47-year cycle in gold. And I went back to the 1790s, 1792. Congress fixed the price of gold on April the 2nd, 1792 at $19.75.
Wow.
41 years later, which is Lucas 47 times 3, Congress and President Roosevelt fixed the price at $20.67 and declared that gold could not be held by individuals, and actually went out and confiscated it. 47 years later, exactly, January 21st, 1980, gold topped at $873 an ounce. 47 years later aligns with April 2027. And I believe that is going to mark yet another high.
Wow.
So
boy, what a confluence of numbers. Shut the front door. We got to write those down, folks. That's big time stuff.
So we've got here comes the music. So we got another year plus of bull market in the metals.
Stay tuned. We got a couple minutes left for the break. Stay tuned. We'll be right back with Stan Harley, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, we're back, folks, with Stan Harley. Stan, we have a question. Dude, in context with this gold, do you do a chart on silver also, Stan?
Silver. I did not bring any charts today for our interview, but perhaps in a future.
I know they topped on the same day on the 20th of January in 1980, so I would imagine they have the same cycle, though. But I've been very involved with silver my whole life, and I've been watching it go straight up from here. Wow, it's just amazing. Silver dollars, the silver dollars you used to get them in Vegas for $1. Those are there was $120 a piece now for a silver dollar because the premium's so high.
Yeah, all the precious metals, all three of them, platinum, gold, and silver, make their cycle highs and lows on the same day, but the amplitudes will vary. And just like with the stock market, I look for divergences.
Mm-hmm.
Wow, and I have
really amazing.
One final chart. If we got some time, I've got one final chart.
We got time. Please go ahead, my friend. Go ahead.
Alrighty, Rue. Ran this off shortly before coming on the air with you. And this is a daily chart going back to the 1st of October of last year. And take note of the time counts between lows to lows and highs to highs. And you'll see the Lucas numbers popping up time after time. The Lucas numbers, 11, 18, 29. Wow. There they are. 47. Wow. Show up time and time, plus or minus one. That's not bad. Defining the lows to lows and the highs to highs. And assuming the pattern continues, the next significant low should occur right around February the 2nd, plus or minus. Now, let's recall my earlier suggestion that we're going to make a low either today on the close. Oh, there's the music. I guess we're done. Okay.
Hey, we're going to have you on again soon, Stan. Thanks for joining us, my friend, and may God bless. Stan Harley, folks. We'll see you on the flip side tomorrow.
Steve